I think we're going to have much higher inflation, like, 12, 13, 14, 15%. And at that point in time, the screaming is going to get very loud. And arguably, there'll be some kind of a monetary reset or a restructuring or reform of some sort that will lead to a fix of this before all fiat completely fails.
Hello again, everyone, and welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vieira, part of the outreach team of Silver Bullion here in Singapore, where we want to help you truly secure your wealth. Lawrence Lepard joins us today. Lawrence founded Equity Management Associates, LLC, or EMA, back in 2006. And EMA is an equity investment management firm that invests in growing private and public companies located all around the world. And since 2008, EMA has focused on investing in companies which mine the monetary metals, gold and silver, and an advocate for owning Bitcoin. And we're delighted to have Lawrence join us here today. It's time to saddle up and silver up for Lawrence Lepard. Lawrence, welcome back to SBTV. How are you doing?
I'm doing great. Thanks. Thanks for having me back, Patrick. Nice to be with you.
Glad to have you back on as well. And we do have a guest in the house, Jake Prieto. He's a fan of SBTV, a subscriber, and so I invited him in to ask a question or two if he should have some coming out for you. So
Sounds
Jake,
great.
welcome also.
Thanks, Patrick.
Okay, Lawrence, I want to start off with the theme and the reality of monetary debasement insurance through gold and silver miners and Bitcoin. Why these
Yeah,
areas and what are the expectations in these areas?
sure. Well, so the larger picture, the larger macro picture that we talked about before the show is that the government is kind of trapped. U.S. federal government, I'm talking about most particularly, although it applies to many governments, in the sense that they've allowed debt to get so large, excuse me, and that they now are running enormous deficits to service the interest on that debt, and they've kind of gotten themselves into a doom loop where they need higher interest rates to control inflation. Higher interest rates increase the interest cost, which then increases the deficit, which then means they have to sell more bonds, which they have to pay interest on, and so on and so on. So it's a wash, rinse, repeat. And the only way they can keep the system afloat is to continually expand the money supply to address the need for to make good on all the debt. Because if they were to contract the money supply severely or to even let it go flat for a long period of time, all of the debt would be unpayable and the interest would be unpayable. And so we know, factually and mathematically that they need to continue to debase the currency by printing more of it, creating more of it over time. And that therefore every year, the currency loses purchasing power. And even though they claim that inflation's down to 3%, I think we would all agree, and most people would agree, that that's not what they're experiencing in their lives. The cost of food and many of the other things they buy, insurance and housing, I mean, you name it, it's all going up a lot more than 3%. I mean, three is down from a printed highlight of nine a few years ago or a year and a half ago. But I think the three would probably be a trough low, and we're going to start going higher again because you're seeing commodities prices across the board going higher, which indicates to me that the next wave of inflation is coming. And so to take, that as the prelude to we're going to have the government's in a position where they need to and have to create monetary debasement. What that means is that each monetary unit, each dollar, will buy less stuff in the future. And so, that's otherwise also known as inflation, right? The price of everything is going up consistently in the future. And so, my fund is built around, and my strong belief on Twitter and everything else that I'm arguing for is that in people, when they go to save capital, save money, they need to save in the forms that the government can't print because the government can't print gold, the government can't print silver, the government can't print Bitcoin. The supply of all three of those things has constraints and limits. And in terms of gold and silver, it's geology and time to pull it out of the ground. In case of Bitcoin, it's an algorithm that says there are only going to be 21 million of these things. So, and therefore, in fiat dollar terms, these things are becoming more valuable. They're really not. I mean, they're the same thing. I mean, an ounce of gold is an ounce of gold is an ounce of gold. It's just that as the dollar gets worth less and less and less money, or less, has less value because of the debasement. It costs more dollars to buy something real, which is an ounce of gold. And this has been going on for a long time. We went off the gold standard 71, and the dollar's lost 97% of its value since that time. The last 3%, we're going to lose that too. It's just going to take, a few more years. So I think your question kind of, you asked kind of where are these things going? Nobody knows, right? They're going higher. We've already seen that. And I think it's very notable that in spite of higher interest rates and monetary tightening on the part of the Federal Reserve, gold, silver, and Bitcoin have all broken out to new all-time highs. Bitcoin just barely so, 73 up from kind of 71. But gold and silver quite dramatically so. I should correct myself, not silver. Silver has not broken out to an all-time high yet. It broke out of a nice base, in the 20s and broke through 30, which was a very strong top that it held for 3 or 4 years now. Gold, on the other hand, actually is making all-time highs in dollar terms and in most other currency terms. And gold had enjoyed kind of a top of 2070 for a long time. I mean, it kind of got closer to that in 2011, which is a long time ago, 14 years, 13 years ago. It got up to 1900, and then since that time, it had never really penetrated 2050, 2070, and now it's in the 2300, 2400 range, bouncing around up there. But I mean, it was a very clear breakout. So what that tells me is that the markets are saying, okay, Fed, we know you're tightening. We know you think you're going to try and control inflation, but you know what? It's bullshit. We don't believe you. We can see the math. We know what's going to happen. You're going to have to print, and when you do print, these things are going to be worth more money, and that's why the markets are front running the next Fed easing, which I think will come, sometime in the next 18 months to 2 years. So that I think it's a lengthy answer to your question, but I tried to comprehensively cover the topic.
No, it's good. I appreciate that. It's interesting how you mentioned the waves of inflation and how
Yeah,
we should be expecting even more of it because I think it was the Bank of Canada cut rates some 25 basis points. I think the ECB they're wavering back and forth whether they're going to do it or not. Maybe they did. I'm not
yeah,
sure.
I found that very interesting. I mean, there's absolutely no evidence that inflation has been, completely brought back down to what everyone's target level was, which was around 2%. And yet these guys are cutting rates because just to, as I said, they need to have lower rates because the cost of their debt is high if they don't. And so, yeah, so yesterday was Canada, today's the ECB. I don't know when the Fed will do it. The Fed may not do it. It's unclear, but the point is, even if they don't do that, they are going to take other monetary steps that are going to lead to more currency units being in circulation. I mean, they will change the rules for the bank, reserve requirements. They'll do some other things that will allow, the banks to buy bonds because, they've got a fundamental problem, which is they've got too much debt. And they've got they're having a hard time finding buyers for the debt. I mean, one thing they did do somewhat recently, I think it was Powell's last press conference, the last meeting, was they were tightening. They were quantitative tightening was reducing the Fed balance sheet. They were taking bonds out of circulation through that, and they cut that rate sharply. I think it was roughly $60 billion a month they were doing, and they hinted they'd take it down to 30, and in fact they took it down to 25. So they've already started to turn the ship. I mean, the tightness came, in early of 2022 when, Russia invaded Ukraine and inflation really took off. And Powell, the guy who said, they weren't even thinking about raising rates, suddenly went on the fastest rate hiking campaign ever. And so, last fall, the 10-year went through 5%, which was a big number, an important number, I should say, in terms of kind of the pain it was causing. And it was very interesting at that point in time, within the course of about 2 weeks, 10 Fed governors came out and said, well, no, we think we're done raising rates, you know, and the 10-year immediately traded back down to under 4%. So, they know they've got a problem and they're just trying to manage expectations. They also know that inflation, they have not cured inflation, but they've got their mouthpieces and others saying, well, maybe the new target should be 3%. And, maybe we're not quite at 2% yet, but we're going to get there. And there's a lag effect. And that, in my opinion, they will create excuses to ease monetarily because they have to. So we can see that coming.
Yeah, with the yields, I think it's still inverted. I think it's been inverted for about 2 years or so now, almost 2 years or so.
Yeah, yeah, yeah.
Um, but let's just say if the Fed manages to cut rates, Europe cuts rates, Canada cuts rates. We see these guys cutting rates. Let's just say a year from now, or a year and a half, maybe 2 years. Are these rates still going to be at these lower levels, or are we going to see it make a U-turn?
It's very hard to say. I don't honestly know what they're going to do. I really don't. I mean, it's um, there's it's I just say it's hard. It's extremely hard to say. I think more likely what's going to happen is eventually that something is going to break. Something major is going to break, whether it's commercial real estate in the United States or the stock market in the United States or employment in the United States, and they're gonna say that in spite of the inflation we've got, which is they're gonna say they're gonna say they're still aiming for 2%. They're not gonna be there. They're gonna claim that it's gonna come in the future with the economy slowing down, and they arguably could have there's some argument that that's somewhat correct. And I think they're gonna turn on the monetary spigots again. They have to. I mean, they really have to. They can't live without the money supply growing. And so I think in the next crises or the next problem period that they enter, which I don't know when it'll happen, but it's kind of mathematically certain that it will happen. Their balance sheet's going to go from, I mean, it went from three-ish, the three something range to the nine range with the COVID crisis. And then the nine, they brought it back down to seven. And the Fed balance sheet is a good proxy for, base money out in the system. And now it's in the sevens. And my sense is when they come to the next big print, which they'll have to do, and it'll be driven by some sort of a crisis, the Fed balance sheet will go to 15. It'll be and right and we'll be back in the next wave of inflation. I mean, the 1970s is a very good analog for this, and Tavi Costa has some very good charts that he puts up regularly on Twitter, showing how there were kind of several waves of inflation. There'd be inflation, the Fed would tighten, it'd come down, the Fed would say, okay, we've got it under control, they'd loosen again, and boom, the next wave would start. And I kind of expect that this decade will have a similar look to it.
If you're enjoying this interview with Lawrence Lepard and I, please consider subscribing to our YouTube channel. And did you know that at Silver Bullion, there are 6 different types of accounts to fit your needs? To find out more, go to www.silverbullion.com.sg, click on the Signups tab, and choose from these 6 different types of accounts. Or email me, Patrick at silverbullion.com.sg, and I'll help to get you started. Yeah, it's a great point because if it gets back to that, I mean, the balance sheet, Fed balance sheet is going to be starting at a higher point, and even the M2 money supply charts, they're going to be starting at a higher point as well.
Oh yeah. Yeah, no, it's amazing how much it went up. I mean, I think we grew the money supply. I think we grew it by 40% in 2 years. I mean, that's never happened before. I mean, it was really stunning. And of course that's what led to, all the inflation that we've got and the record prices in the stock market and everything else. I mean, that liquidity had to go somewhere, right? And so it's pushed up the price of everything. I mean, I just continue to be personally shocked at the cost of everything. I mean, I just was visiting my children in New York, and taxi cab rides or Uber rides that, 5 years ago would have been $5 or $10 are now $30. This is for a quick 10-minute cab ride. It's nuts. Everything's nuts. The prices are just crazy everywhere.
Yeah, we get the same thing here in Singapore when it comes to these Uber type of rides. But when it rains, that price doubles. So I don't
Oh,
know
is
if
that right?
it's
Yeah, they know how to have peak pricing, right? Yeah.
with these things that we're talking about so far, monetary debasement. There's also been that word being used, fiat apocalypse. Will this fiat apocalypse be just the US dollar, or is it going to be a lot of other fiat currencies as well?
Well, that's a great question. I mean, look, the dollar still is the major, reserve currency in the world, and Brent Johnson and his dollar milkshake theory is not entirely wrong. I mean, if the dollar has trouble, all currencies will be having trouble. The dollar may arguably could have trouble last. There are two sides to that argument, but what you described, fiat apocalypse. I mean, that's several steps down the road. I think that I think that between here and fiat failure, which is kind of what I think apocalypse would equate to, we're talking about just very high inflation, very high and persistent inflation. Kind of think about, South American countries like Argentina or Brazil that, or other countries that have just had, double digit inflation. Not, the last cycle, 9% was the top, right? In stated. I mean, it's, and that's the other thing, of course, we haven't even got into the fact that, well, I mentioned it earlier, but the numbers aren't accurate, right? And we all know that they're lying about the numbers. I mean, if you look at like a shadow government statistics, calculation of inflation, it's much higher. But the point is that I think what's going to happen is I think we're going to have much higher inflation, like, 12, 13, 14, 15%. And at that point in time, the screaming is going to get very loud from the US population. And arguably, there'll be some kind of a monetary reset or restructuring or reform of some sort that will lead to a fix of this before all fiat completely fails. I mean, I think there's some possibility that they won't reform it and that it'll just kind of continue to grow worse, and ultimately, Gresham's law will take over, and fiat will, more or less become worthless. I think that is a possibility. And I'm not trying to be hyperbolic. I'm not trying to scare people. I'm not rooting for hyperinflation because it'd be a terrible, terrible event. But it's not, if you look at how this country being the United States, has behaved with respect to its monetary and fiscal policies, and if you look at the things we're doing and you look at our debt to GDP, um, all of these characteristics, when they have been exhibited in other smaller countries, admittedly not the world's reserve currency, admittedly not the world's, leading military, country, have led to massive devaluations of the currency and or hyperinflation. So, to blindly think, well, the U.S. can get away with doing the exact same things that in all these other countries have led to high inflation and hyperinflation and not have any impact, I think it's folly. I mean, there's just no way that we're not going to have an impact. The question is, how bad does the impact get? And then the question is, how do the policymakers respond? I mean, the one thing, I mean, I manage a fund that's focused on gold, silver miners and Bitcoin. And the one thing I say to anybody who's looking to invest in my fund is, because if they're smart, they'll say, well, how does this go wrong? How do we lose money here, Larry? What do you worry about? And I tell them, and then, of course, they laugh at this response. I say, well, look, if the U.S. government were to suddenly get really responsible, and stop sending money overseas and close all our military bases and cut back our military budget by 50% and means test Social Security and means test Medicare and, cut all unnecessary spending and quote unquote balance the budget. If our government were to do that, then, what I'm describing in terms of the debt, and so forth, I mean, it would be less of a problem. I mean, there would be potentially there'd be a way to work our way out of it. I mean, we did have this much debt to GDP coming out of World War II. Now, and they used financial repression, yield curve control to manage that. Different demographics. I mean, you had all the GIs coming back. You had the growth of the automobile, interstate highway system, appliances, houses, all of it. So what happened in that period is we actually grew out of the debt that we had. The debt to GDP was very high and problematic, but by, repressing the bond market and the underlying growth in the economy got us out of that problem. Slightly different now. We don't have a baby boom. We didn't just win the World War. We all have cars and appliances and houses. So it's not we're not going to necessarily as easily grow out of it. Now, things like AI and some other developments could help, but the point is that it's a mess, and they're going to have to have. I think they're going to have higher inflation, and then I think they're going to have to eventually, try and figure out a way to balance the budget and get the monetary system back on an even keel. Because what we've seen is it's progressively gotten worse and worse. I mean, each monetary event gets bigger and causes more damage. The bursting of the dot-com bubble, that was one event. The GFC, that was another event. COVID was another event. And each one keeps being bigger and bigger than the last one. And at some point, the monetary system doesn't necessarily hold together. I mean, that's how I see it.
Right. Yeah, I think for a lot of these reasons, they are why people are going into gold, silver, Bitcoin, things like that. But even with let's say the miners, when it comes to the futures exchanges, Shanghai Futures Exchange, COMEX, we're starting to see price disparity, arbitrage.
It's really, yeah, it's really amazing. I mean, my partner and I have been tracking like the silver premiums. I know you're the silver, silver bullion there. I mean, the silver premiums in Asia, have been substantially higher than in the United States. I mean, I've seen gaps as large as 17% differential in pricing. Now, look, somebody's going to arbitrage that out. And in my opinion, the silver market is extremely tight and arguably it's explosive. I mean, I think we're going to see silver, as it consolidates here over 30, eventually it's going to take out 32, 33, 34. And, I mean, to me, 40 or 50 is falling off a log. And, silver is the one commodity that really since the Hunt brothers back in the 80s, has never hit an all-time high. I mean, it's hit $50 twice, once back in the run in the 79-80 period, and once in 2011. And every other commodity in the world has hit all-time highs. And so, I'm sure silver will too on this next commodity bull market run, which 50, 60, $70 silver. I mean, I've got a bunch of silver producers that are with ASICs in the teens, high teens, low 20s, that if they had those kind of silver prices to sell into, I mean, the profitability of these companies would be just unbelievable. And they're selling at cheap valuations at today's silver price and with today's earnings. So, flex that silver price up to 50, which I think is an entirely realistic target. I expect to see $50, you know, probably late this year, early next year. And that'll really change the economics of a lot of these mining companies.
I think Jake, he had a question about the silver producers.
Sure.
Yeah, I mean, just a basic question. How do you see, say, new investors or new speculators like myself, maybe thinking about trying to get into investing in miners, silver, gold miners, but we hear about maybe the under the table sales, and a lot of people don't talk about maybe miners selling uh, or they sell stuff off the side, off the back door. How do you feel about some of that information that's not going through the COMEX? It's not going through the system. It's just a, drive up, pay and pick up.
Yeah, I'm not really aware of that. I mean, maybe some of them do it. They shouldn't be doing it, but I'm not aware of it. I mean, if they're listed, they should be audited. If they're audited, they should be able to document every ounce they've sold, who and how and why and what price. Um, what are you referring to specifically?
Well, I mean, you hear about different mines, and it's all around the world. Maybe that they sell. I'm just saying, example, silver ore. They have a large batch, and companies, because everybody's wondering where's Sony, where's Apple, where's all these guys getting all they're buying all this silver or gold or whatever they need. But how is it not going through the system, which reflects maybe why the prices aren't going up or the miners stocks aren't going up.
Well, the minor stocks aren't going up because everybody hates the category and everyone's scared that these new prices aren't going to last. And the cost of mining has been going up consistently. I mean, one of the big negatives in the mining business in the last 3 or 4 years is that the metals prices have been flat to slightly down, call it flat, but the cost, the ASIC, the average, all-in sustaining cost of pulling an ounce out of the ground have been just marching up, as you would expect, because all those inputs are subject to inflation, labor, explosives, electricity, diesel power, etc. So, the mining investors, I know that until very recently, Bloomberg was showing the expected future prices of silver and gold, 2, 3, 4, 5 years out as being, well below where they are now. And so it's going to take a real shift in mentality on the part of investors to say, hey, these prices are real. And not only is gold not going back to 2000 or 1800, but it's going to go from 2300 to 3000. And once investors start to see and believe that, which I think is true, excuse me, then then their view on the miners is going to change substantially because they're going to realize that, yes, there's cost inflation in pulling metal out of the ground. It's running 10-15% a year. But, if the price of what you're selling is about to go up, 70%, it doesn't matter. The inflation's going to, the margin's going to take care of that inflation problem. So, that's a lot of what's going on there, I think.
That's a good question, Jake, because I think there's we know there are things called offtake contracts, and there's a lot of speculation with good reason if these things are happening with miners, or is it really something like you say for listed companies that absolutely cannot should not happen.
Yeah, well, look, I mean, I'm sure, they're supposed to disclose it if they do it. I mean, they can sell the product to whoever they want. And they always report what their average cost is. So you can look at their average sales price. So you can see their average sales price as compared to the average price of the month and see if they did better or they did worse. And, some of the miners and some, not fewer today than in the past, but have hedged, their production so that, they've already committed to sell it. Sadly, generally speaking, at prices lower than today's market price, but they put those hedges in place to generally to get financing to do some kind of a expansion. So, there was some logic to what they were doing. But it's an issue for sure.
Um, yeah, for sure. I was looking at sound money investing or gold buying by the central banks and governments. And at last I checked for
Yeah.
Q1 of 2024, I saw Turkey, China, India, Kazakhstan, and even Singapore had the largest gold buying increases for Q1 this year. It, in your opinion, Lawrence, how come we don't see the UK or Spain or Canada or maybe the US, basically Western nations not buying gold?
That's a great question. I mean, because they're stupid. I mean, they live in the fiat world and they believe their own bullshit about, they can control their monetary outcomes. And what all these other countries are saying is, you know what, they're sitting at the poker table. They say, we're going to call you. We'll put in our chips. We call. Let's see what you got in terms of cards. And the fact is that, what we're seeing, I think, take place is a gradual awareness and transition from the fact that the US dollar is not as good as it once was, to and so that if you have excess earnings or savings in your country, you don't want to store them in treasury bonds. Of course, net US treasury bonds held overseas have been declining since 2014. So this is a long-term trend. But you'd much rather save in something that you know is going to appreciate in value. And so gold and silver, make the most sense. I mean, most big, the countries, very few countries have made the jump to Bitcoin. I mean, El Salvador did. It's a dinky country. I think there's some big countries in the Middle East that are doing it on the QT. I think Russia might even be doing it on the QT. I don't know. But the traditional go-to neutral reserve asset is gold. I mean, you've got 5,000 years of history. Everybody knows what it is. And these countries aren't stupid. I mean, they can see what you and I can see, which is that, the money is being debased. Worldwide money is being debased, and they probably are, to some degree, the calculation, they're making a bet in their head that says, okay, it's being debased, and not only is it being debased, but it would be one thing if it was being debased, but the trend was going to go away and it was going to get better and it wasn't going to always be debased. I mean, that, okay, fine, you had some inflation, but you fixed it. But the problem is it's actually being debased and the debasement's getting worse. And so what I think they're saying is, we could see where this is going and it's not good. And there could be a monetary reset at some point in the future, and we're going to make the bet that the people who have gold are going to have a better place at that table in terms of the monetary reset versus those people who don't have gold. And but some countries are incredibly stupid about it. I mean, you look at Canada. Canada's, I mean, at least the United States theoretically owns 261 million ounces of gold. I mean, I think there's some debate about that because Fort Knox hasn't been audited for a long time. But Canada doesn't even own any gold. I mean, it's crazy.
You are
Yeah.
one of the guys that have been able to cross or straddle that bridge between gold and
Yeah.
Bitcoin. Can you let us know what are the similarities that both sides actually have towards these types of different types of assets to monetary assets to hold?
Sure. Yeah. I mean, it's look, they're both good monetary assets. They're both forms of sound money. Before Bitcoin was invented, gold was the best choice, without a doubt. The people who own gold and the people who own Bitcoin tend to be actually very, very much aligned on what's wrong with the world's monetary system, right? I mean, it's that I mean, you could, I mean, like I take a Peter Schiff who hates Bitcoin, but his analysis of the problem and the monetary debasement issue, the government spending, all of it. I mean, we see things absolutely, positively eye to eye. Now, with respect to the two assets and comparing them, they're different. Okay. One has a much longer track record, much longer history. It's physically present. It doesn't require any energy after it's been mined. I mean, it's just a brick and it sits there. The Bitcoin network requires constant energy to operate, but there's no real blockchain in gold, right? I mean, if I hand you a piece of gold, nobody knows that I did that, and there's no record of it, and it's totally private. Whereas in the Bitcoin world, everything you do there's a record of a movement. Now, the movements are anonymous because the code, the addresses are anonymous, but nevertheless, there still is a record there. What Bitcoin is Bitcoin represents a technological invention called, digital scarcity. Pre-Bitcoin, there were a bunch of attempts to do it, and they didn't work. And there was never a way to create digital scarcity. As we all know, you can copy a file, you can copy a movie, you can copy music. It's pretty easy to copy anything digital. Well, the Bitcoin guys eventually, the inventors eventually figured out how to create something that was digitally scarce, which really actually it's a big deal. It never existed before. And so with that digital scarcity, they created a network and they set a fixed limit of 21 million of them. And so, in a sense, it has become a form of quote unquote digital gold. I mean, people are, I think the number one use case for Bitcoin is still the store of value use case. I mean, it's not like people are using it heavily for transactions. I mean, there is a transaction layer coming. It's called Lightning. It's going to work. It will be used for transactions in the future, but right now, people are buying it because they want to hold it for long periods of time, and they feel like it'll protect their purchasing power, which is why you always bought gold in the past. And the difference between the two that makes, in my opinion, makes Bitcoin, a superior choice if you're looking for alpha, admittedly with a lot more volatility, is that Bitcoin's undergoing an adoption curve. I mean, there are 8 billion people on the planet. There are 21 million Bitcoin. There are 46 million millionaires. There are 21 million. I mean, every millionaire in the world can't even have one Bitcoin. And I think ultimately someday every millionaire in the world is going to want some Bitcoin. And so, in order to get some, they're going to have to pay a much higher price. So that adoption curve has made it, since inception 15 years ago, the best performing financial asset ever. I mean, in terms of, growth and value. So, I think that's going to kind of continue now. The price one pays for that is that you have to be very comfortable with the volatility. I mean, I would never recommend anyone put money into Bitcoin that they're not willing to see, decrease in value in a bear market. And these bear markets have been brutal. So, you've got a dollar cost average, and you've got to have a long-term perspective on it. But I think, I'm fully convinced these coins will be worth hundreds of 100,000, say within a year, and hundreds of thousands, and then ultimately millions of dollars per coin as the next 5 or 10 years roll by.
All right,
So.
Lawrence Lepard, you're giving me some FOMO here with the Bitcoin, but before we head out, can you tell the good people how they can follow you on social media and about Equity Management Associates?
Yeah, the only form of social media I really use is Twitter, and I make a lot of noise on there. I'm not very friendly to the central bankers. I think the central bankers have really caused everybody a lot of unnecessary pain. So you just follow me under my name, Lawrence Lepard, and be careful not to, fall for the gazillion bots and bullshit imitations of my name. It's just the way it's spelled, and I've got 175,000 followers. So if you see anyone that's not that, block them and report them. The other thing people might want to do is go to my website, where my partner and I, we write a letter every quarter, a macroeconomics letter. It's free. And if you go to the website, go to the bottom of the page, you can put in your email. and then you'll automatically receive it. We'll never spam you. That's the only thing we send out every quarter. And all the back ones are in there, so you can, print them out and read them. And basically, what we do is in, December, March, June, September, we kind of write up, a lot of macro views. And here's what's going on in monetary debasement world, and here's why, this is working or that's working, and this is what we think that the central bank's next move is going to be. I mean, there are all kinds of, we've just scratched the surface of lots of detail that go behind the conclusion that I've reached about monetary debasement. And so these reports, which tend to be between 20 and 30 pages, give you a lot more detail and information on how we get to where we're at. So people might find it helpful. It's free. And the other thing I would just add is that I'm very much a big proponent for sound money, strong money, and both sides, gold, silver, and Bitcoin. Sound money is, I look at around the society today and I say, what's wrong? And everyone's yelling at each other. You got blue and red screaming at each other, and they're missing the point. The underlying fundamental problem is that the money's broken. Read Lynn Alden's book, Broken Money, and she's got it dead ass right. I mean, the money is broken, and we've got to fix the money. If we want to make the society work again, we want to get, fairness in terms of, distribution of wealth, and, just having people be treated fairly. We've got to get rid of this fiat system, because the people who run the system have used it to unnecessarily enrich themselves at the cost of all the, to all the rest of us.
Yeah,
So.
no, that's all good stuff. I appreciate that. And maybe next time we do this, Bitcoin has its all-time high, gold has its all-time high, and maybe silver will finally get there.
I think so. I mean, my targets. I mean, kind of next 12 months, Bitcoin's over 100. I think gold's going to 3,000. I think silver's going to 50. And then, I mean, let's let that happen, and then we'll kind of reassess it. And there'll be corrections and so on and so forth. I mean, none of these bull markets. I mean, to me, we're in a decade of this. I mean, and none of these bull markets go straight in one line for forever. I mean, so there will be corrections, and people have to be aware of that. And when everyone's, I mean, and I'm very much aware, when I got my Uber driver talking to me about gold stocks, I'll probably be selling them, but but uh, but right now we're a long way away from that day. I mean, I talk gold stocks or even Bitcoin. Most people just don't even know what it is. I mean, everyone knows. I mean, the one thing I will say that's different than 3 or 4 years ago is I think everyone is really coming to understand that inflation is a serious problem. It's a really serious problem. Now, what everyone's hoping, and what the gaslighting of the politicians is that don't worry about it. We got it under control. We're going to fix it. Yeah, it was bad, but we're going to fix it. And I think the next revelation is going to be, no, they didn't fix it. They're not going to fix it. It's getting worse. And boy, you think we've got some anger, political anger now. Wait until that happens. You know what I'm saying? I mean, we're going to see some serious political anger when that happens. And I think that's what's coming next.
MMT, CBDCs, all these things are definitely on the table.
Oh, yeah. Oh, it's crazy. I mean, the other side, the $1 trillion
Yes.
coin, right? Did you hear about that one from Krugman? Yeah, yeah. They've got all kinds of things cooked up, and I mean, they float these ideas out there, they test them, and I mean, I mean, we're one crisis away from a CBDC. Oh gosh, things are absolutely horrible. We get it. Here's our government. We're here to prepare to help you. We're going to give everybody a CBDC account. We're going to put some money into it for you. And we're going to be able to see exactly what you do with it. Oh, by the way, you can't spend it on this, you can't spend it on that, etc. I mean, that could be coming. There's just no doubt. I mean, the COVID thing allowed them to test a lot of things. I mean, they were directly wiring money to people. Universal basic income, that's probably coming. Yeah. So, but again, it's like Biden forgiving the student debt. Where the hell are they getting the money? I mean, it's not like we got a lot of excess savings sitting around. Just, oh yeah, let's just forgive the student debt. Well, no, we're forgiving the student debt because we're printing the money to forgive the student debt. So really, we all pay for that. I mean, the students get a debt forgiveness. We get higher gasoline prices, because of the monetary debasement. That's what's happening.
Yeah, and
You know?
politicians get votes. So
And politicians get votes and they get to stay in office, and that's job one for them. It's not our well-being. Their job is to make themselves comfortable and to stay in office. So it is what it is. It's a broken system, but I will say this: I'm optimistic that this trend towards sound money is gaining strength, and that as we gain strength in this area, we're ultimately going to beat that system, and that's going to go away. I mean, our grandkids will say, God, I can't believe you guys let a bunch of people called the Federal Reserve set interest rates. What were you thinking? It'll be like us looking at people in the Middle Ages saying, hey, you guys were bloodletting people because you thought bleeding them would make them live longer, get rid of disease. I mean, what the fuck were you guys thinking? I mean, I really do think that's how we'll look back on this when, in another 50 years.
Yeah, because even
So,
our other guest Jake, I mean, he understands the whole sound money, gold, generational wealth type of thing. Yeah, so he's storing it up for his kids. Did I let the cat out of the bag, Jake?
Yeah, I'm just glad I got into it several years ago, and we're all doing our best. Everybody's trying to stack and do what I can for my
yeah.
kids and family.
If you stack all of these assets, I think your kids will be very well taken care of. I got a boatload of silver and I paid between $6 and $8 an ounce, so I
Yeah,
don't
that's cool.
regret that. But I bought it in the 90s, it's so
Yeah,
yeah.
Okay.
$100 an ounce silver, that works for
yeah.
me.
Hey, I was going to comment on the Biden giving the kids all the school loans, paying off their debt. Maybe
Yeah.
if we're lucky, they'll give them a 1099 and we'll get some of it back.
Yeah, right. They shouldn't they? Yeah, that's a good point. Yeah. Anyway, it's been
Good.
great being with you
Appreciate it,
guys.
Lawrence.
Really
Thanks.
enjoyed it, and happy to come back anytime.
That was Lawrence Lepard sharing his views on precious metals and the economy. To see more of Lawrence's views and work, please go to ema2.com. If you like this video, please do subscribe, give it a thumbs up, and share. All are greatly appreciated. Audio-only versions of this interview can be found on iTunes and Spotify.